Ladies and gentlemen, good afternoon and welcome at the EPFSF webinar on MiFIR. We call it Promoting a True and Efficient Single Market for Trading. And it's actually a little bit historic for the European Parliamentary Financial Services Forum, because that was founded with members of the European Parliament back in 2000, when the first Financial Services Action Plan was launched.
Investing in this common project has a high value on return. The European Parliament's Research Service estimates 120 billion euros per year in economic growth would alone be the added value of an effectively regulated EU capital market. The MiFIR review is an important building block in this regard. And our today's event is very timely. We must duly take into account the issue of data quality of non-regulated venues and the concerns on the impact on the market data revenue for regulated markets, including on the many small and mid-sized exchanges, especially in Central and Eastern Europe. Third, of course, the MiFIR review must be seen as part of the bigger picture. In addition, we urgently need less complexity and scale of reporting.
We need to empower investors, in particular the small retail ones, by enabling access to market data, which is necessary to invest more easily, and also by making European market infrastructures more robust and more competitive. And I also trust that the changes proposed will increase market liquidity, will facilitate access to funding from capital markets, and boost efficient single market for trading. The proposal the Commission puts on our plate changes the current framework. These changes can overcome, I hope, the fatigue around the CMU that already is growing, fill existing gaps, and also produce simple, understandable, and deliverable market environment.
Thank you very much, Danuta. And actually, you set the scene, but also you make an important remark. We do this because we want more efficient capital markets, and we do that for people and businesses and the economy of the EU.
And I think with this proposal, at least from the preliminary reactions that we can get, we can very clearly see that capital markets are now back on the agenda, and they are really center stage in our way of handling the crisis, of surmounting the crisis, and about creating an ecosystem which is not only bank financed. This MiFIR proposal, by the way, is, if you want, just the tip of the iceberg. There is a lot of other stuff coming your way.
Having dynamic, attractive, and competitive financial markets is a key component of the EU strategic autonomy. You know, it's the overarching objective that we are aiming at, and we do think that financial markets have a key role to play. So MiFIR, in this regard, in this perspective, is a crucial component, because the question is whether the EU has the sort of capital market that it needs to support its economy in a period of the Russian invasion of Ukraine and the period, of course, of post-COVID recovery. So the EU at this stage is over-reliant on third countries for the provision of key activities. The EU needs deeper pools of long-term capital and we have to make the EU an attractive destination for global capital and investors.
In our opinion, retail investors must be really able to easily access data to be able to make informed trading decisions. And this, of course, translates into a consolidated tape that, if of value, must really allow for ex post verification of obtained prices and best execution deals for investors. At this point, also, I would like to point out to our research from last year, so consumer access to EU equity trade data, where we found that really EU equity market have become much less accessible and transparent for retail investors, for an average retail investors. Also, ESMA assessment from 2 years ago found that many of the trading facilities did not really fully comply with the applicable framework that concerns delayed data publication.
So the need for consolidated tape is adapted. So what matters is to ensure that the legislative proposal makes it possible for the consolidated tape to answer the needs of market participants and for consolidated tape providers to have a viable business model. And if I look at the legislative proposal through that lens, I would make 4 points. The first point is that it was critical, I think, to avoid the trap of a competitive consolidated tape. Competition in that domain would not bring prices to a lower level for users. It would simply decrease the probability of providers.
I think it is very important the way that the proposal recognizes the importance of the consolidated tape. So that really is crucial. And as someone who represents a global firm, if I look at European markets, it is very noticeable that this is a really big tool in the toolkit that European markets are missing, while other developed capital markets do have a consolidated tape, in particular if we look to the United States, for example. So I am a very strong believer in the delivery of a successful consolidated tape and the fact that that really will help attract more investors.
And I think we truly need to stand up for transparency. We need to, I think, have for retailers, I think, venues which they can access. And I think what would a tape produce? And we've heard, there's 200 some venues. And I think maybe to correct a little bit what Tillman said, he said, the US is so consolidated. I think let's look at the fragmentation. We have over 200 venues in the execution space for equity in Europe, most of them not accessible by retail. And that will not change through the MiFIR report. So the retailer will see a consolidated tape of many prices he can never access. So it will be a wonderful shopping window like in the Soviet Union. And I think very timely we should make that reference. It will be a shopping window like in the Soviet window. The retailer can see prices. He will never be able to verify